the S&P 500, the Nasdaq 100. Now, when we look at this action on the day, we've been really looking at the longer term view here. Now, if you don't know, tomorrow is CPI, so I kind of wanted you to get technicals, crumble them up in a ball, and throw them out the window, because I do believe fundamentals will trump the technicals here. However, it's important that we look at how we're kind of moving here. Coming into today, very easy action to identify. Okay, I made it very clear going into yesterday into today. We expected that push into said resistance 15.55 roughly, and then going into ES was roughly, real quick, sorry, I don't know why I didn't have that up yet, into 44.95, right? What is this level? You know, it had been marked June 16th highs, the double top there, roughly, right? Clear level. It was also all over Twitter, so I had you all up to date, right? Go watch the previous videos. Now, we knew into today, what did we know? We knew it was going to be bad action. We instantly knew. Now, I will say you got some good selling after the Apple event, but besides that, there was nothing really happening. A lot of chop, a lot of back and forth. You saw we kind of opened up, came down, you know, and today opened back up, hit those levels, came back down, just chop, gross, not really interesting, right? And again, you had some selling near the end of the day, but that was pretty much it. Good move on Tesla. But a few things I want to talk about, what's happening here, okay? A lot of these things look like they want to drop. I'm going to tell you the unbiased opinion here, right? And when we look at the 4-hour chart, the technical play out for the downside is looking likely. But I want to say this first and foremost. If inflation CPI data comes out, which is tomorrow, 7:30 Central, I believe, yeah, like an hour before market open, that comes out hotter than expected, you're gonna see big selling. It's gonna be big selling off rip. Now, the question that was at hand was, what if core inflation performs better than expected, meaning core inflation still on the down slope, lower than expected, but headline CPI comes out higher. Now, this is an interesting question. It was a great question, so I have to answer it, and I had to address it in the video. At that point, you might see some initial selling on CPI, but the Fed has been very clear. They are more interested in core inflation. They are trying to throw oil and energy out the window. And I'm going to give you a simple reason why. It's because they can't have any control over oil, and it's so volatile here. Now, I think oil is a very big determining factor. We're going to go over it here in a second. But we have to understand both sides of the tape. And so what really comes down to is, from this rate, from what happens at CPI, is what happens at the rate decision. Because the rate decision is what's going to play a huge factor in here. We saw a report from Reuters today. It was on Twitter as well. It was like a 97% chance of a pause from the Fed, right? And the Reuters is pretty good, so I like that. But they also said it was about a 70% chance they wouldn't cut rates, the earliest being March 2024, which I also like that statement, because rate cuts aren't going to happen anytime soon. So that's what's important to understand here. Now, before we go into anything else, I'd ask you to do two things. Consider liking and subscribing. It helps out tons. I love you guys. Love the support every single day. Videos giving you the understanding, breakdowns every single day. The Discord link is also down below if you're interested. This is our website. If you want to take that next step into trading, understand how we trade, why we trade, what goes into every single day, understanding the watch list of what we're going to be trading, how not to be trading, everything in between, the link is down below, so make sure you check it out. So, again, a few things throughout the day that I do want to cover. And we'll jump back into some equities and things that I'm looking at. Number one, the dollar, you saw a little bit more decline on the day, which again, this just points to the indecision in the market here. We saw the dollar getting slammed while the market was also getting slammed. We even go and look at yields, which again, more kind of downside-ish on the day. You saw some initial drop, then come back up. Not terrible, right? But the 30-year in particular got hit a little bit more. Again, it makes sense as we go into all these data pools that you're going to see some indecision and a little bit of back and forth, right? A little bit of contradiction, right, in the charts. And that's kind of what you're seeing here. Again, this goes back into the thesis of stop trading before key data days. It's one of your worst. Just take the day off, go to the gym, play with your kids. Just don't look at the charts, because you're going to lose money most likely. So I want to make that really clear. The big thing, though, here is oil. And I've made this really clear, and it's kind of the only like bearish thesis right now for me, is so oil clearly broke out of the key level down here, this range, right? This was our resistance. You broke out. You're very illiquid in this range up into the target of around 92, 93. And you're going to work your way there. Again, as we look at the previous CPI, you got a little bit of in PPI, and I don't think you got any of it in PCE. Gas prices, energy prices were not on the rise that I think they should have been, right? Reflecting this data here. So you're going to get a bulk of this large move to the upside inside the CPI report most likely. So it makes sense for CPI to come out a little bit higher and not to continue the downtrend. But the question is does it meet expectations? Because if it meets expectations, which they expect it to rise already, that comes into a trickier circumstance based on where we're at. And of course, we know this isn't going to happen again. I'm going to tell you right now. You know, last year I was a very big bull on energy. We expected it to pump like crazy. It happened. This isn't going to happen again. Now, this is a big move that we're getting, but the question is once it stabilizes, does inflation go back on the same track? So if we do get a not extremely large impact on energy with core inflation, it'll be good. What do I mean by that? When we go into, you know, I love to give you past cases so you understand how the market moves here. Oil typically moves in trends, right? You'll trend, volatility, trend, volatility. And the trending lasts for a few months, 3-4 months minimum. You know, we've seen longer cases, right? So more than likely, you're going to start trending. Now, I will say as we get through next year, you're going to see some volatility going into the election. It's just going to happen with, you know, there's a lot of favoritism going towards the Republican Party, and Republicans are a little bit more bullish on oil. So we'll see what happens there. So we need to be able to identify what's happening. So I do expect, right, once we get to 92, probably can see some sideways movement. I would hope. But that's what we have to try to anticipate. And it's not as easy as saying just because oil went up means inflation numbers are going to rise. It's not that easy. It's not that easy, because you have to be able to identify what else is happening in the market as well. Now, we look at a few things. One, the medical side of it. The medical side of inflation, I think, will continue to rise. That part is going to stay on the uptick. But the rentals, they will continue to drop. This was interesting because we saw over the summer, typically rents rise over the summer. The fact that rents they stayed a little bit on the decline through summer was good news, okay? Rents will continue to decline throughout the winter months. My personal opinion. I'm going to say it. I think it will. That on top of energy where it's at, your best case is that they counteract each other and that they kind of we see like stagnation on CPI. That's best case scenario, okay? But you got to stay a little bit vigilant and pay attention to what's happening. If that case happens as well, I go to the side of where I anticipate the Fed to like it, because they've continued to say the most sticky part of inflation is basically real estate. Okay, that's the part that is the big red flag. So again, these are things to kind of take in. We'll be going over that data here on the channel tomorrow, so make sure you check it out. But again, let's go over what we're looking at as a whole in the market. Okay, I'm going to give you both cases, right? So if CPI comes out good, these are the names I would like. CPI comes out bad and we start getting downside, these are the names I like. Now, you might be saying, well, Tyler, are you playing both sides of this? No, I am liquid, right? The only position I have is obviously my Apple stock and the business account, and then my Teslas and my personal account for 2025, which are up handsomely. Okay, so what I want to say here first, before we jump into any of this, when it comes to day trading, and I recommend you think about this, like just hypothetically, when I go into the market, and this is like what blows people away, I don't jump into the market based on predictions, okay? I need to go to my office in the basement, right? We never know what's going to happen with CPI. We're going to cut spending over here at Option Drops HQ, right? Jay, no PTO this month, buddy. No. Maybe we might be able to do the whole Vegas retreat for the company, but we'll get to that. Now, when I go into the market, I want to make it very clear, and I think we need to have a little bit of a talk because some people don't get this. When you're day trading, right, you're interested in the immediate action. Okay. So when we're looking at that immediate action, we don't want to be stuck in a position, and we don't want to fall in love with the trade. We don't want that. We don't want to fall in love with a thesis, especially around day-to-days like this, right? So when we're going into this, I want you to understand when I'm looking at the market, I have two sentiments of how I'm looking at it, right? And I prepare for both ways, especially if I have nothing in the market for the short term. So when I'm looking at this, I come out with a plan. That's why I'm looking and charting the Nasdaq and ES at all times. So I'm ready and I know where they're going to move to each key level. Just like we knew with 44.95 and 15.5 on NQ. Those weren't just made up levels. Those were previous major inflection points. That was the important part to understand. So we knew when we got rejected there going into a day-to-day, we knew today was probably going to have either downside or just overall chop. There was no point, right? Especially if you're net bullish on the market. So when I'm going into this, I'm finding names that have been performing very well. That being said, what names do I like? Amazon, Google, Microsoft's been doing pretty well. Tesla, right? Those are good names. Then I look at some of the names that are performing a little bit lackluster, right? Potentially Apple could get hit, right? I have Apple in my longer term area, but I'm looking at them and like, okay, we're back down at local level, local lows almost, right? You're broken back below 177. This thing could have some downside back into local lows, right? I'm looking at the bank sector, right? Because if this comes out bad enough and we start to price in another rate hike, banks are going to get slammed, right? That's how I view this. Okay. So I don't just jump the gun and I don't just go, bonkers either way, right? I have a specific plan the day before. When the data comes out, then I execute which plan is going to work or which plan I see best fit. So when the data comes out better than expected, then I say, okay, well, I want to toss away. I don't really want to favor the downside plays. I would be more interested in those upside opportunities, the ones that have been performing best because they have a little bit of momentum, right? Something like NVIDIA has had some downside in recent days and weeks. I do believe if it holds 450, which it's trying to do, okay, if that can hold there, and then we get some good news out of the Fed and things like that with data, I do believe NVIDIA is due for a bounce, especially with how shorted it is, and Tesla. Those names are heavily shorted right now. So that's how I view this. So I just want to make that understood. And some people are like, you're like, Tyler, this is common sense. Of course, it makes logical sense. You would be surprised if you go and read those comments down below. People are like, well, Tyler, how do you trade both sides? That makes no logical sense. And I'm like, Timmy, hear me out. You don't have to hold a trade overnight. Believe me or not, especially in a choppy, indecisive market and with a key data announcement coming out very soon. Okay, so number one, what we're gonna look at is gonna be Tesla. And Tesla, like this is one of those names that I've just been holding, right? So I went 2025. I was letting everyone know I was just buying those 2025 contracts this entire dip. And those are looking really good and they're up a lot. So you look really good here. What I'm looking to see specifically out of Tesla is can you mount above 273, 274? If you mount this area, I believe you're very illiquid into around 290. And you look really good. So if Tesla can mount above this and get above this with good data, you're in the opportunity and you're actually getting back into the area to where you feel comfortable swinging after you get this data. Gonna tell you right now. Number two, Amazon has been one of the better looking names overall. Now, giving you the best visual, this is one of my favorite things to look at, is the 200 SMA on the weekly and 200 SMA on the daily, the simple moving average or just the moving average. It depends what you're on, right? So when you look here, once we got back above this, I posted this all over Twitter. Like once you mount this, you look really good because you're making higher lows, you're holding, buyers are stepping in, and you had really good earnings. You mounted 135, almost immediately shot into 143. I started cutting most of my options I had, like 142. Okay, that was that. Amazon, I'm going to tell you right now, you're like, Tyler, potential double top. I agree, potential double top. In order for this double top to be validated, it's actually one of the easier trades here, and I'm going to show you both sides of it. If you break above with good data, 143.6, this thing looks beautiful into 147, and it honestly probably runs higher based on those earnings. You start pushing into 150, possibly 157. It will come quick. It'll be pretty aggressive, my personal opinion, because Amazon's doing very good right now in the market. The downside play, got to play both sides here. We're looking here. You're looking for the break of 130.6. I don't want to play this downside here. I don't want to chop and trade to the 200. No, I don't want to mess with that. Don't want to touch it. You could try to get in a little bit early when you hold below the 200 SMA, but again, it's not really worth it. You want to see confirmation of the neckline being broke, and then you would see almost a move down into 118, 120. right? So that's both sides here. Amazon, I favor this to the upside based on how good they're doing with their numbers. And I mean, they're kind of killing it right now. And I think they're going to continue killing it. Personal opinion. The next earnings look really good. Apple, I had mentioned these guys. Option wise, not super interested right now. Okay, I'm not. Long term, love them. Love them, love them, love them. It's really simple here on Apple. You get back above 177, it's not a far ways to go. You look for instant upside, you're going to start moving quick. Their event wasn't too big today. They didn't mention anything about AI. Kind of heartbroken about that. I hyped them up a lot. I'm sorry, guys. I was wrong. Sorry. They said nothing about that. But I still think they're going to do a lot of good things with their new MacBook products, specifically the Air. They expect it to decline, which they've mentioned previously, which is why they started dropping. But I do think the MacBook Air will do very well because the cost is very, very low, and it's a really good product if you know anything about computers. Very good product. So Apple, I like them above 177. If you hold below and data goes bad, you hold below 177, you're looking for local lows around 171, 172. Okay, you start breaking below 171, yeah, you're gonna be pretty concerned. You can like clearly see, I don't have to do too much charting. I mean, that's gonna be really bad if that breaks. So again, what you're looking at there. Microsoft, sleeping giant. I keep seeing people drawing wedges. I see them everywhere. They're all over Twitter. You know, I mean, it's not a wedge. I don't really know what else to say. Clear trend to the upside. Crystal clear. Like, you had the inverse head and shoulders played out. You pushed to the upside, pushed to 138. I mean, right? That's clear channel. Like, you had the clear breakout, false breakout, but I mean, it's not a wedge. Like, obviously, manipulating a chart to look like a wedge. Like, I encourage people to zoom out when you see these wedges. Like, not a wedge. But you could be breaking down here. If you hold below 130, you're seeing a push probably into 330. You're looking for a push back into 322. However, this has you at a very interesting point. Again, break below 130, then you look for the downside. Holding above 330 with good data, in my opinion, I've been very bullish on Microsoft, and you had a really good push here past few weeks. You hold 330, high possibility this thing shoots back up to 345, 350s. These areas aren't liquid at all. Okay, I'm going to tell you right now. You hold 330 with good data, 338, book it, right? Punch the ticket, right? It's like March Madness. Punch your ticket, right? You love it. You love it. You love it. You love it. Okay, so I can only say that so much. The last one I'm going to mention, because I just don't want to go through over too many names, and you guys have too many options, and like, oh, I missed them because I had too many options. I'm like, okay, buddy, who cares, right? NVIDIA. So me and Jay were talking about this today. And so I'm going to go to the 1 hour to give you a better view. So you've had some weird behavior on NVIDIA lately. For instance, 470, very interesting level. You broke down, you broke 470, and when you broke 470, you really expected a big drop. I mean, you could argue there was a demand here. I don't like it, though. I don't like it. But you kind of bounce around, and then you gap down through. And then, like, you kind of keep getting support at 450, and then you kind of just chop around. Like, you should have, when you broke, like, 460 here, again, you should have dropped instantly down to 440. Even here, you break 450, and you're just chopping around. It looks like it's flagging, I will say that. But you're just chopping around. Semiconductors specifically, they're being heavily shorted. Again, it was the same thesis we had back with, I don't even remember what name it was. I don't even remember what it was. But we talked about potentially shorts having to cover. And it might have been NVIDIA. But when we look at NVIDIA, I think shorts are hammering this thing. Very, very aggressive here. NVIDIA starts, and there's a lot of FUD around it, gets above 450 and can hold, and data goes well. I promise you right now, if the Nasdaq starts to track back to the upside, the semiconductors are not going to get left in the dust. And once shorts start to have to cover on specific names, which we've talked about a lot here, you've seen the names just go parabolic to the upside, right? It's going to happen quick. Now, it's not to say, you're going to squeeze the 550. It's not what I'm saying. But I'm just saying here, a lot of aggressive downside plays here. Just saying, I'd be watching it above 450 with good data. You start to really track to the upside. If you want to be really conservative, you can wait till you break above 470. Above 470, you're looking for instant movement back into 490. But still, what I'm looking at there specifically. Again, I didn't want to cover too much here. If you guys have questions, comment down below. I recommend following on Twitter just because I'm posting there like nonstop. And I think I answer most of your questions there. Personally, someone's calling me. I'm sorry. Have a good one, traders. Good luck. Be safe. CPI 730. Have a good one.